XRP has just lived through one of the most dramatic and unpredictable weeks in its history. The market was shaken, traders were caught off guard, and even the most experienced investors found themselves staring at charts in disbelief. It all began on October 10, 2025, when XRP collapsed in a massive wave of selling that shocked the entire crypto industry. Within a single day, XRP's price dropped from around $2.82 to a devastating low of $1.64. It was a crash of more than 40%, one of the largest single-day declines the token has ever seen. By the end of the session, it recovered slightly, closing near $2.36, but the damage had already been done. Billions were wiped from XRP's market value in just hours, and panic spread through the trading community. The cause was a perfect storm of events. It began with a series of long liquidations on futures markets, massive leveraged positions being forcefully closed as prices fell. Institutional futures open interest dropped by around $150 million, showing how quickly traders were pushed out of their positions. Trading volumes exploded, jumping over 160% above the monthly average, a clear sign of fear and forced selling. Across major exchanges, price wicks showed violent swings as algorithms and high-frequency traders battled to catch the falling knife. But what made this crash truly unique was that it didn't happen in isolation. It was part of a larger shift that had been building for weeks. On-chain data revealed that large holders, the so-called whales, had already been preparing. These are the accounts that hold millions, sometimes hundreds of millions, of XRP. They had been quietly selling for days before the collapse began. In fact, whales were unloading about $50 million worth of XRP each day, and over the course of a month, their total sales reached more than $1.5 billion. This heavy selling pressure flooded exchanges with supply. Every time prices tried to rise, new sell orders appeared, pushing the market down again. For smaller investors, it was almost impossible to fight the tide. Whales often move ahead of the crowd, reacting to information and risks faster than anyone else. When they start distributing their holdings, it usually signals a warning, and this time it was loud and clear. Why did they sell? There are several reasons, each part of a bigger picture. Some whales were simply taking profits after a strong rally earlier in the quarter. Others were reducing exposure to risky assets as global uncertainty increased. And some were likely preparing for potential market events, regulatory decisions, policy changes, or new financial products that could affect XRP's value. In short, the smart money was repositioning, and the rest of the market was left catching up. From a technical perspective, the charts also showed trouble brewing. Analysts noticed a descending triangle pattern forming for several weeks before the crash, a bearish setup that often predicts breakdowns. The key support zone between $2.75 and $2.80 was tested repeatedly. When it finally broke, it triggered a cascade of stop-loss orders, adding fuel to the fire. The next major support now sits around $2.20, which could become the line that defines the next phase of this market. If XRP can hold above that zone and rebuild strength, it may form a new base. But if it breaks below $2.20, more pain could follow. Beyond the charts, global conditions are also playing a major role. The world economy is on edge, with trade disputes intensifying between major powers and central banks sending mixed signals about interest rates. The U.S. digital asset sector remains in a regulatory gray zone, with licensing and compliance rules still unclear. This uncertainty affects not only XRP, but the entire crypto market. When institutions sense instability, they often pull back from risk, and crypto is usually the first to feel it. Another factor fueling both hope and confusion is the ongoing speculation about a spot XRP exchange-traded fund. The idea of an ETF excites many investors because it would open the door to large-scale institutional money. If approved, it could bring fresh capital and credibility to XRP, allowing it to be traded more easily on regulated platforms. However, there's also a risk of what traders call a sell-the-news event. In other words, prices may rise in anticipation of the ETF, but then fall immediately after the approval as early investors take profits. That's exactly what has happened before with other cryptocurrencies. Excitement builds, news hits, and the market flips. Meanwhile, long-term holders are showing mixed behavior. Some are reducing positions, while others are taking advantage of the chaos to accumulate at lower prices. On-chain metrics suggest that accumulation has quietly increased below $2.40, especially among addresses that have historically held XRP for more than 2 years. These are investors who think beyond short-term volatility. They see XRP as part of a longer journey toward financial utility and institutional adoption. Volatility remains extremely high. Over the last week, XRP's intraday swings have reached more than 40% at times. That means the token can gain or lose almost half its value within a single day. This level of movement can break inexperienced traders and test even the most seasoned investors. But volatility also creates opportunity. For disciplined traders, large swings can mean significant profits, as long as they respect risk management. The emotional side of the market is equally intense. Social media platforms filled with posts of frustration, panic, and speculation. Some traders accused whales of manipulation, while others called it a healthy correction after months of buildup. Every crash in crypto brings out both fear and arrogance, those who lost and those who boast about buying the dip. But as history shows, no one really knows where the bottom is until much later. For now, the focus remains on key price zones. The area between 275 and 280 is being tested as resistance after flipping from support. If XRP can reclaim that level, it could rebuild confidence and attract momentum traders again. If it fails, another slide toward $2.20 looks likely. Above that, resistance around $2.90 and $3 remains the gateway to recovery. Outside of technicals, some macro news could still change the narrative. If global tensions ease, or if positive regulatory news arrives, sentiment could shift quickly. Markets move on emotion as much as they move on data, and a single announcement can flip fear into optimism overnight. In contrast, more bad news, such as delayed ETF approvals or tighter financial regulations, could reignite another round of selling. Through all of this, one truth stands firm: discipline is everything. Crypto markets reward those who stay calm when others lose control. Panic selling rarely ends well, and buying blindly into drops without a plan is just as dangerous. The smartest investors approach times like this with patience. They prepare strategies, set stop losses, and never risk more than they can afford to lose. Watching whale behavior has also become one of the most important tools in modern crypto trading. When whales start sending XRP back to private wallets, it often signals accumulation and recovery. When they move coins onto exchanges, it usually warns of more selling to come. Following these patterns gives insight into market psychology, what the big players are thinking before the headlines catch up. Despite everything, XRP's fundamentals still attract believers. It remains one of the fastest and most efficient digital payment networks in existence, with partnerships and pilot programs running across multiple continents. Its long-term vision, to bridge global financial systems and enable instant cross-border settlements, continues to draw support from banks, fintech firms, and investors who see its potential. So while the short term looks chaotic, the bigger picture isn't over. XRP has survived crashes before. It has faced lawsuits, market crashes, and years of uncertainty, yet it's still standing, still ranked among the top cryptocurrencies in the world. That resilience itself is a statement. For now, the coming weeks will determine what happens next. If the market stabilizes and whales slow their selling, XRP could rebuild momentum toward the $3 zone. If fear continues and support fails, the token may retest the $2 level before finding its next base. Either way, traders and investors alike will be watching closely, ready to act when the next opportunity appears. The lesson from this wild chapter is simple. Markets rise, markets fall, but emotion is what truly breaks traders. Stay calm, stay patient, and always think 2 steps ahead. Because in crypto, the ones who win are not the loudest, not the fastest, but the most disciplined. XRP's journey continues, filled with risk, resilience, and the constant reminder that no storm lasts forever.